exciting time to be in India, because the story of India right now is the story of growth. At the time when much of the world is grappling with uncertainty, trade wars, fragmentation, and slowing growth, India is charting a different course, a course that is anchored in stability, institutional reforms, and long-term ambition. Now, if you look at the latest economic survey, you'll realize that India is set to grow at close to 7.5% real GDP growth in this financial year, and the medium-term growth number is anchored to be above 7%. That places India as the fastest growing major economy on the face of this planet. It's not just growth. Look at the other aspects, other indicators. Our exports touched a record $825 billion in the last financial year. Our fiscal deficit has reduced to below 5%, and government is committed to a clear path of fiscal consolidation. Inflation has moderated, and balance sheet of financial sector companies, banks, they're looking very healthy, with NPAs reducing on a year-on-year basis. Even our external buffers are comfortable. Our external debt is at moderate levels, and we do have adequate foreign exchange reserves. If you look at all of these are not isolated statistics. These are indicators of institutional strength. And today, India combines growth with scale, macroeconomic stability, institutional reforms, very large digital public infrastructure, and a favorable demographic profile. A lot of this has been already spoken about in the sessions in this conference. Few countries offer a combination of all these things today. And I believe if we sustain this momentum, the dream of becoming a developed nation, Viksit Bharat, by 2047 is not unrealistic. It is actually achievable. In fact, in my conversations with business owners and CEOs, whenever I ask them, what are you feeling excited about? They say you can be anywhere on this planet, but you cannot not be in India. But a developed nation is not just rich, it is also resilient. It's one of the things that IIDA chairman mentioned in his opening speech, which we just heard. A developed nation is resilient in the sense that it protects its citizens. It protects them against health shocks, against climate events, against income loss, against longevity risk, and against retirement insecurity. It ensures that as the families are lifted from poverty to middle income group, from middle income group to upper middle and high income group, they do not fall back in the ladder because of some adverse events. And that is where bridging the protection gap becomes very vital and central to this Viksit Bharat journey. As income rises and assets expand, risks also expand, and that's where we need to make sure that we bridge the gaps as we look to become a Viksit Bharat, or a developed nation, in the next 2 decades. Now, to discuss this very exciting subject, we have 3 experts in these areas. First of all, we have Mamta ma'am. She is currently serving as the Executive Director at PFRDA, Pension Fund Regulatory Development Authority. She has extensive experience of 30 years spanning across banking and pension sector. She started her career with SBI, and after spending 8 years in SBI, she went on to join IDBI Bank, where she handled various leadership positions. After 21 years in banking, she joined PFRDA, and during last 15 years, she has been associated with all areas of NPS, whether it's policy making, pension funds, investments, NPS distribution in non-government sector, digital initiatives, regulation, supervision of different NPS intermediaries, adjudication, subscriber protection. You know what, I tried to remember all of this, but she has done so much that I could not. Thank you so much for joining us today, ma'am. Then we have, from our own profession, Sai Srinivas Dhulipala sir. He's a qualified actuary from the Institute of Actuaries of India, and he's currently working as a consultant actuary. Prior to this, he was the appointed actuary of Bajaj Allianz Life Insurance. He's also worked with a few other insurers in the past, managing various roles in the actuarial function. He's also been part of several committees at industry level and a regular speaker at industry forums. And of course, representing the GI side is Hiten, who's currently working as a senior director PNC at Willis Towers Watson. He has worked across diverse roles: appointed actuary, chief underwriting officer, Head of RITT Broking, building experience across business planning, P&L accountability, reinsurance technical functions, etc. He's also, by the way, currently the chairperson of GI Advisory Group and has been a part of multiple regulatory committees. I welcome all my panel members to this discussion. I don't think we'll do the presentation way. I think we'll try to do the conversation way to see if we can get the speakers to be a bit candid and talk their heart out. So let's get into the discussion. We have, the topic today is universal coverage by 2047, and this is something that we have been hearing for the last 2-3 years: insurance for all, pension for all, social security for all. One of the questions that has always intrigued me is what does it actually mean, and how do we measure the success? So let me start with you, Mamta ma'am. When we talk about universal pension coverage by 2047, what does it truly mean in Indian context? We are a very large country, so how do you define it? How do you measure it? Do you measure it in terms of universal access, enrollment, or adequacy of retirement income? How do you look at it?
Thank you so much, Khushwant. When we talk of universal pension, we mean umbrella of schemes that are there. It's not just NPS at the moment, it's EPFO for organized sector. There are various schemes by the government, and there is, of course, national pension system and EPS also. I mean, if we include EPS also under EPFO. Now, having said that, we are far from that, from the target that we have set for 2047. And as of now, I think we comprise of just 15 to 20% of GDP compared to countries which have more than 150% or even 200% of GDP. So our mantra is we try to spread awareness by saying that we are aging, but before we grow old, we have to grow rich. When we speak of Viksit Bharat, Vikas is for everyone, for the country, for the people. Now, it is our bounden duty to ensure that everybody does not only have social security, they have to have ample money for all their requirements to lead their life with dignity. And for their Vikas, it is important that each of them have at least some money in their pocket. So when we achieve that target, then only we can say that we are universally covered. Coming to adequacy, we do talk of enrollments, but enrollments are far from what we would have wanted. As of now, we are at 9.3 crore subscribers. But adequacy will come later on. First, we have to enroll everyone. We have to have everybody included in this plan. So that is our first motto, and then comes adequacy. Thank you.
Thanks, ma'am. And let me, bounce off the same question to Sai sir now from a life insurance perspective. What does it mean when we say insurance for all by 2047? What does it mean from a life insurance perspective? Does it mean basic term cover, or are we talking about broader financial security? How do you really define the success?
Thanks, Khushwant, and good morning, everyone. See, if the objective is to provide adequate protection net for all the people by 2047, when I say all insurable people, then the primary requirement is to have adequate life insurance cover from a life insurance point of view. Now, how do you define adequate life insurance cover? Which means, in case of unfortunate death of the policyholder, the future incomes, right, will have to be provided, and which means all the expenses and also probably some of the loans. That is how it is defined. Now, this can vary, for each individual and family. But sometimes the thumb rules are applied. Usually the thumb rule applied is maybe sometimes 10 times of the current cover, current annual income. Yesterday Sanjeev mentioned in the term insurance discussions at least 5 times. So whether it is 5 times or 10 times, at least that should be the discussion. But currently, a lot of focus is on savings. So I'm not saying savings products should not be there in the life insurance. It can be there, but the primary focus also should be on the adequate life insurance cover. And then once there is adequate cover, in whatever way you define, even if you say 5 times of the current annual income, at least we should try and achieve that. And then over and above that, there can be savings products, which is mostly offered as a diversification from an investment point of view.
All right, thank you. Thank you so much, sir, for that perspective. Bouncing off the same question to you, Hiten, now, from a general insurance perspective, what do you mean by insurance for all? And by the way, I mean, general insurance is very wide. So looking forward to your views on this.
Thanks, Khushwant, and good morning, everyone. As you rightly said, and when you look at general insurance, the landscape change is very big. We have crop insurance, we talk about farmers. And today, more than 6 crores farmers already covered or insured. You have Ayushman Bharat, the government social security net, which covers roughly about 55 to 60 crores Indian citizens. You also add home insurance, for example. You also look at disaster recoveries. There are state governments who are buying parametric products against natural catastrophe. So I think globally, when insurance for all is talked about, they only talk about universal health. So for example, in US, when you call universal, they only talk about Medicare. That's the dynamics that they restrict themselves to. Whereas India has gone a step further. They're saying that we'll talk about insurance for all, covering health, also talk about SMEs, businesses, farmers protection, income protection of farmers as well. And somewhere I think the new age, when we'll talk about AI and things, somewhere we should also look at unemployment benefits as well, because in India, the social security net from unemployment doesn't exist, or it exists to a very limited set within factory workers or union workers to that extent. So I think the scope will emerge as we move towards the goal of 2047. But I think the start has been very good. The government is already doing quite a lot. Unfortunately, the parameters that are being measured is only from insurance coverage perspective, which is provided by insurance companies. But if you look at the overall wide social security net, including what the government provides and the state government provides, probably the insurance penetrations could be a much bigger number as such already.
Thanks, Hiten. So as I understand, all three of you have not just spoken about enlarging the enrollment, but also have spoken about the adequacy of cover. So thank you so much. And of course, from a GI perspective, we need to look at much wider risks. So that's the message that we get when we talk about coverage for all by 2047. Now let us now drill down a bit into specific areas. Let me start with you, ma'am, on pensions and social security. Now, if I look at the last few years, we have seen a lot of action. There have been new labor laws which recently came. There has been regulatory strengthening. There has been expansion of NPS, new National Pension System, a rollout of Atal Pension Yojana, and of course the renewed debate around state-sponsored pension models. I think some of the state governments went back to defined benefit pension plans. So how do you see the action, or how do you assess the journey over the last few years on this side before we start talking about the future?
Yeah, just to contain the fiscal deficit, NPS was brought about in 2004 when it became compulsory for the government servants to subscribe to NPS, and OPS was, stopped. From 2004 to 2009, it was only NPS for government employees, and from 2009, it was open for private citizens as well. From 2009 till 2025, which is a good 16 years, there are only 76 lakh subscribers, so to say, including the corporate subscribers, in private sector NPS. Now, in a population of 146 crores, I think this is minuscule. Last 2 years were spent in, formulating the UPS, which is a hybrid of OPS and NPS for the government employees, sensing that there was some tension regarding NPS from the government employees. However, once that settled down, we started focusing exclusively on private sector. And as our friend just pointed out, we have also started telling our pension funds to make persona-based specific pension products, because we realize one size fits all NPS may not suit everyone. So we are also focusing on MSME separately, farmers separately, workers separately, SHGs, pension sakis, corporates, self-employed. So we are not leaving any sector untouched. Now, again, within this sector, we realize that it's not just the product. We have to have different strategy of distributing NPS. So during the last 8 months, or maybe even 6 months, I'm proud to say that in such a short span, we had about 200 awareness sessions all across the country, right from Kerala to Punjab and from Northeast to Gujarat, you know. So we are trying to touch every possible sector in every possible geography. And we have tied up, because we realize we are a small team of, say, about 100, 120 people. We cannot be going around talking to everyone. So we have tied up with partners. We had tied up with media partners on one side, and we have tied up with the Big Four on the other side, you know, like KPMG, PwC and all, who help us with their expertise in touching the people in the clusters, rather in the MSME sector. Then we are tying up with NABARD on the other side, you know, to reach out to the farmer producer organizations. So we are going in a very, very dedicated manner to touch all the segments, you know, so that our intentions do get fructified. Maybe at a later stage, we will wait for the next year. And we have set ourselves a very, very ambitious target for next year. It's 5 crores enrollment. So in 1 year, I think that's extremely ambitious, considering we have just 76 lakhs till now in the last 16 years. Then apart from all this, we are going digitally in a very, very big way. We are tying up with NPCI. We are trying to enroll our subscribers in the UPI mode, so that it is just 1 or 2 clicks, you know, and you can onboard. Now we realize the sectors that we are targeting, farmers or even the small MSME workers, they may not be very savvy digitally. So we are trying to work equally hard on the digitally assisted journeys as well. Now the third aspect is, we realize that our distribution is not very motivated, I would say, though strong, not very motivated, because of the lowest fees. So our lowest fees, which was just 13 bips, just 13 bips is the lowest in the world. It was not very motivating for our distributors, so we have increased it substantially, though it still continues to be one of the lowest. We are now 20 bips. So at least, you know, some more amount goes into the distributor's kitty. And we are trying to expose APIs with the banks. We are trying to handhold them. We are trying to help in their native journeys, in their redirection models. So we are making multifold efforts.
Thanks so much, ma'am. You've covered gig and informal sector, gig workers, informal sector, agriculture, MSMEs. But let me be a skeptic for 2 minutes. We are talking about 5 crore enrollments. But can enrollment alone be a measure of success? We are, you know, I mean, these really are people, if I talk about gig workers or agricultural sector, these really are people who probably will have volatile incomes or irregular incomes. So even if we get them enrolled, will we really achieve anything meaningful out of it? And how do we deal with this situation?
Excellent question. Yes, we are seized of this. And like, for example, for gig workers, especially for the platform workers, we've already integrated systems, you know, with Uber, with Urban Company, with Zomato, so that mass enrollments can be done. That is one part of the story. Not talking about contributions, when I say contribution, we are not insisting on monthly contributions. Maybe, you know, which is more suitable for wage-based cohort. So we are talking of minimum contribution of 10 rupees. We are reducing it to 10 rupees, and the dependence will be on high frequency of contributions. you know, when a Zomato delivery boy comes to you and you want to tip him 30 rupees, 50 rupees, we want is as simple as there should be a QR code, and when you tip, the money goes straight into the pension account. So somewhere it has to begin. Anyway, and pension is a long-term thing. So again, even in AUM, we have said today it is around 17 lakh crores, and we have set ourselves a target of 45 lakh crores in next 5 years, not in 1 year. But the point is, beginning has to be done. So as you rightly said, the focus is not only on enrollment, but it is on ease of contribution, because we realize that a farmer can deposit maybe only at the time of harvest. The MSME worker may not be able to deposit the money on a monthly basis. Again, with the NPS Vatsalya, I hope you have heard of it. We have introduced NPS Vatsalya, wherein you can open the pension account for your child on the day he is born. And then we have increased the entry age till 85 years. So from 0 to 85, I mean, you cannot have a bigger journey than this, you know, to give you the actual optimum result of compounding. Again, there was a deterrent, or maybe there is a fear factor in the mind of people that इसमें lock-in बहुत बड़ा है. हम 60 के पहले निकाल नहीं सकते. We have recently reduced the lock-in. Now we have kept the vesting period is only 15 years. We have enhanced the number of partial withdrawals that you can make. We have increased the number of partial withdrawals as well as the amount of partial withdrawals. We have brought a whole lot of multiple scheme framework wherein a person cannot open just one pension account, he can open multiple pension accounts, because we realize that in mutual fund, people want to have portfolios, you know. So we have enabled that as well. So
Oh, thank you, thank you. So
Thank
we're going to see a lot more of flexibility along with a lot more of enrollment. And you know, as you were mentioning when we were you know, talking earlier, that it's the power of compounding, and these small efforts over a long period of time will become very meaningful. Just one last question before we go into do a deep dive into life insurance. What do you think are the biggest challenges or risks to this journey? I mean, I see a lot of action, I see a lot of passion, see a lot of mind going into you know, creating you know, a social security net. But what, in your view, is the biggest challenge? And if you you know, wanted one structural shift, what could that be?
I think the biggest challenge is awareness. Biggest challenge today is awareness. Biggest challenge is to make the Gen Z or the informal sector understand the need for pension. So structural shift, I will say 2 structural shifts. One, like Kerala recently has come up with the dedicated budget on old age security. So I think all of us will have to think of such dedicated budgets at whatever level. I'm not saying at state level, at whatever level. So that we can, all of us can spend some time in spreading awareness, in, you know, doing a little bit at whatever age group. And second is in, you know, assimilating the public digital infrastructure in pension.
Right.
So that is, we are working on this.
So when you mentioned you know, budget, you mentioned time budget and not financial budget. Do you think
No.
government has any fiscal headroom to spend more in this area?
No, I don't think government has done its bit. And I think all credit to government, they have already freed 12 lakhs from tax. Now those 12 lakhs, up to 12 lakhs salaried individual, he has to start, I mean, why should we ask for tax breaks, you know? That's substantial. So we have to put that cohort into this slot of pension, you know. They can easily save 5,000 rupees per month, or at least start with 2,000 rupees per month. So that's our motto.
Thank you so much, ma'am. Coming to you, Sai sir, you know, if I look back, and I started my actuarial journey in life insurance, and from that time to now, I see there has been expansion in digital distribution. Even the distribution methodologies have evolved a lot. We have seen, of course, simplified underwriting and mass schemes that have come in. How do you view the progress that has been in this area over the last few years?
Well, you're right, Khushwant. There is digital distribution, and there's a lot of work happening in the area of distribution, trying to reach out to the rural areas as well. And there are schemes. There is like PMJJBY, etc. And there are many MFI schemes also. But if you measure it from the point of view of whether the protection gap is bridged, um, from that point of view, even if you see the IRDA annual report, the insurance penetration, that has not significantly increased. It's almost like, hovering around 3%. Now, we can say the cover, the average cover increased. But if you adjust it for inflation, then there is hardly any increase in the real cover. And there was a report on protection gap by National Insurance Academy few months back, and they have done a survey, and they have followed like for example the insurance requirement as the requirement, the future expenses they allowed for, and then allowed for their loans, etc., and then they have reduced the current assets. So they have followed a reasonable approach, and on that basis their assessment was the protection gap is 87%. That means if you need a cover of 100 rupees, the average cover actually is 13 rupees and 87 is the gap. And if you further slice and dice into the age segments and different segments, then for younger group, the gap is even bigger, right? So from that point of view, if you see, well, a lot has happened, but from a protection gap point of view, nothing much in terms of bridging the gap. And probably the main reason for that is the focus on the savings products. So if you see, probably the gap in the life insurance is more because it is blurred by the savings premiums. And therefore, even if there is an increase in the ticket size, which means the premium paid by a policyholder, but not necessarily the cover.
So, I mean, we then have a huge gap, not just in terms of the population, the proportion of population that is covered, but also in terms of the adequacy of cover. So what in your view should fundamentally change? I mean, can we rely on insurance companies to bridge the protection gap, or the government needs to step in? The same challenges essentially which we were talking about when we spoke of pension. I mean, we have a large portion of our population living in tier 2, tier 3 cities in rural India. We have gig workers, we have the people engaged in agriculture, who really probably may not be the target segment for insurance companies. So what in your view should fundamentally change if we have to bridge this gap over the next 2 decades?
Right. See, first of all stakeholders will have to work towards bridging the protection gap, right? And this may mean different for example middle class and above, and may mean different for the lower income group and lower class. Now, for the middle class and above, even from the industry side, the awareness has to be created in terms of buying adequate cover. Now, when you say awareness, again, there was some reference to the survey done by Max yesterday, and as per that survey, the awareness has increased. Now, here it depends on the definition of the awareness. Suppose if you ask someone, do you know what is life insurance? Maybe yes, some of them do. Do you know what is term product? Yes, some of them may know. But if you ask the same person, do you have adequate life insurance cover? Most of them, at least in my circle, all of them, they didn't have adequate life cover. Now, which means for middle class and above, it's not about affordability, it's about awareness and adequacy. So that education has to happen, and which may actually mean many changes, even from the way the business is pushed from the insurer's point of view, from the government point of view, from the maybe life insurance council as well, from the profession as well, and the way we advertise also in terms of the life insurance advertisements. Because if you see the advertisements, most of them are actually oriented towards savings products. But for the lower strata of the society, affordability also is an issue, apart from the adequacy. Now here it's a completely different story, in the sense, whatever work that is already happening here, is largely around, like, for example, MFI, the micro insurance cover is for the microfinance. So to the extent of, small loans given to them, they are being covered, which is largely triggered by the microfinance institution. So it's more like a risk management mechanism for them. So to that extent, maybe the loan is protected, but not necessarily any other needs of those lives. So here, affordability also is an issue. See, Swami Vivekananda said, in one of his speeches, that religion is not for empty bellies, right? So if you are starving today, I can't lecture you on dharma. Same thing is true for insurance also. If your today is not protected, what are we going to talk about future protection to a poor man? So therefore, there a lot of intervention is required. Maybe government support is required. Even from the industry also some cross subsidy is required. And even the product design will have to change. You can't sell an individual product to them. So maybe largely it should be around group cover with probably minimal expense loadings, and maybe the other loadings also like commissions etc. will have to be reduced. But here the issue is, this is a segment where the health is not taken care properly by them, and therefore the experience is going to be high. And this segment is prone more to anti-selection and fraud. Some of them are intentional, some of them are not intentional when you talk about anti-selection point of view. So if you see the loadings into the pricing of these products, whatever little that is happening there, the experience is bad, which is factored into the pricing. That means there is inefficiency in there in terms of reducing the anti-selection and fraud. Because the reach is a problem, therefore the cost of distribution is high. Therefore that means the expense loadings are also higher. Now, even the commissions, which can be a controversial topic, are loaded sometimes a bit high, because these guys, because of their small ticket size, don't have a lot of negotiation power. Again, because of the affordability, the persistency also, if at all it is not single premium, is also bad. That means the segment where you need probably the best of pricing from an affordability point of view is actually getting exactly the opposite.
So just picking up on what you said, 2 points that come out of this. One is you said reach is a problem. Now, if reach is a problem, and I think that was somewhere coming out of ma'am's talk as well, do you think it is important for us to have perhaps leverage more technology or have distribution network which is not being built independently by each organization, but perhaps common delivery centers through which we can reach every nook and corner of the country? Any thoughts on that, sir?
Yeah, see, first of all, for example, if it is, again, if we are talking about the lower segment of the society, then, and if we are talking about a product which is a group product, then maybe there has to be a reason other than insurance for that group, and hopefully that group will ensure some sort of reach in terms of at least there's a membership listed or whatever. Maybe it can be through cooperative banks or it can be through other means. But definitely reaching out to them is a problem, and where technology should be used. Maybe cooperative banks can do a lot there, microfinance institutions can do a lot there, and maybe some of these banks, rural banks as well. But if you talk about the other segment, semi-urban, rural areas, other than lower income groups, that means middle income, etc. So there it is again. There also again we have the same issue. The ticket size is small, and therefore the expense loadings, etc. If you see per policy level, they are going to be higher. So there it is awareness as well as adequacy, and probably a mindset as well. When I say mindset, it's about that inadequate. Like for example, I bought a policy, I'm paying some premium, therefore I'm happy, without even looking at whether this is adequate for me or not. And many times, also there is an issue of, you don't want to talk about death. That is also an issue within the families, and therefore discussing about the adequacy of the cover is also ruled out. The other issue is there is always, if you are talking about pure protection, then there is this mindset that I'm not getting anything back. And therefore, for whatever reason, I want to get something back. If not an endowment plan, at least I want to buy a term with return of premium because I want to see something back. And this mindset is a problem. And now here I don't blame, a common man. I'll draw a parallel to some of the discussions happening in insurance companies. When we discuss about reinsurance in an insurance company, usually the discussion is how much we are paying to the reinsurer versus how much we are getting back. And if the gap is bigger, then why are we having it? Now, what is it that CXO of an insurance company doesn't understand about reinsurance that we are blaming a common man about not understanding about insurance? So it is not just about awareness, it's also about mindset.
All right, thank you so much, sir. Coming to you, Hiten, now, and I have a lot of pointed questions because general insurance is so wide. But before that, how do you see the progress has been in terms of expanding the reach of general insurance in India?
So from a market perspective, we are only 20, 25 years old in terms of what we have really gone through. But we are already the 10th largest in the market in the world. And so we have achieved the scale. In the next 3-4 years, by 2030, it's projected it will be among the top 5 to that extent. So when you look at the maturity, we are still at the early stage of maturity in the market cycle, but our expectations are the top notch. So I think from a risk protection measures, today when you look at from a consumer's perspective, there's a lot of standardization of wordings, clauses, especially the non-life side when you look at health, because there's a lot of emphasis that the retail should be protected. Because a lot of legal jargons exist within the policy wordings. How do we simplify? A lot of attempts have been made to make it simplified. There are a lot of mis-selling or forced selling or probably a lot of claims litigation happening, which changes the dynamics when you look at insurance. Especially when the selling itself is a challenge, and when it comes to time of claim, you're not honoring the claim, it creates more dissonance. Right? So somewhere the risk protection has been there. Ombudsmen have been created. The market was largely tariff for the early part of 20 years or so in terms of wordings, although the pricing got T-tariff for last almost 15, 20 years, and the wordings continue to be tariffed. Last couple of years, given that market needs to open up, we have seen de-tariffing also of policy wordings. Health was one area where product innovation has been the highest in the last 10 years. But from a consumer protection point of view, the framework has been created that the customers feel that they are safeguarded. So as a country, as a non-life industry, we have seen a balance where the consumer's interests are protected, but insurers have been given the freedom to innovate and try new things, especially when you look at coverages like cyber, retail cyber, some of the bits.
I'll come to that in 2 minutes.
Yeah, so people have started innovating. You today have coverages which not only provide loss of theft or money theft, but it's also about identity protection. Some of the other bits about people getting harassed online, psychological treatments, and so on and so forth. So I think the innovation continues in the market as well.
You touched upon health, so let me dwell a little deeper, dig a little deeper into this. I think over the last decade, we have seen government-led initiatives, most notably Ayushman Bharat, which has significantly expanded its health insurance access. I think we do hear a lot of numbers that this much proportion of population is covered, enrollment is very high. But is it just enrollment, or is it actually resulting in the delivery? And if no, and if there are some gaps, what do we do to bridge that gap?
I think government had to make some start. And that's what they've done in the last 6-7 years. What they've said today, Ayushman Bharat is all about treatment post-hospitalization. It's not about OPD, it's not about managed care, nothing of that kind. Government had to start somewhere, and that's what they said, okay, let me focus on hospitalization. How do I look at the X number of treatments? Today, more than 1,300 to 1,500 treatments are covered, listed. There's a standardization of protocols, and that really helps the industry to move forward. Enrollments, I think it's also a subject matter because at the end of the day, government is spending a lot on the incentives. There's an X number of budget, where globally where people are spending close to 8 to 10% of the GDP. India is still about 3.5%. So that number definitely will go up as we go forward. But the fact is, it has laid the foundation. They've created the digital infrastructure that's required to progress the scheme further. They're talking about new digital framework where claims can get automated. Companies can start, or hospitals can directly connect to the insurance companies about the framework. Today, even though enrollment is there, there's no documents that flow as far as Ayushman Bharat is concerned. Right? So if you look at, to achieve that scale, to manage 60 crores enrollments, you also need digital infrastructure. And government has spent the last 5 years creating that infrastructure. Once things stabilize, I think the foundations is made, the complex products offerings can be definitely rolled up.
So you're saying that we have made good progress, and hopefully the quality of delivery will keep on improving from here. Another point that you touched upon, Hiten, was around cyber insurance. Now we are starting to spend a lot of time online. We are managing a fair proportion of our wealth either on phone or on these devices. We don't shy away from logging into public Wi-Fi's and doing transactions at various public places. To me, somewhere I feel uncomfortable. I feel, we are a bit exposed with the way the world is, is progressing on the cyber side. Has the time come? And of course, with AI coming in, God knows what will happen. There are developments happening every day. We are talking about now humanoids being a reality in next 1 to 2 years, walking amongst us. So do you think time has come? Because when I look at GI companies, we have always seen them as 60 to 70% motor plus health. Do you think time has come for cyber risk to become a mainstream line of cover rather than a niche offering?
See, my view is, look at the two types of products that we're talking about within cyber. One is corporate cyber, one is retail cyber. Yeah? We have a lot of these new startups who are actually engaging with customers, getting the retail data. The biggest risk they're holding is that, there's a fraud that happens, that data gets stolen, and that they feel that the customers will start believe that, I've been left open and lurched by the vendor, for example. The problem is, these companies are not buying enough insurance. The biggest corporates are not buying enough insurance.
But product availability is there?
Product availability is there. There is enough capacity in the market. Everyone has a product offering in the market. Unfortunately, customers do not appreciate it. In fact, insurance companies have launched a product offering within the cyber product itself, where you can do a vulnerability testing of your systems and profiles. So what they do is, you install a particular software onto a network. It will do a vulnerability assessment and give you a detailed report where your things are challenging.
I run a small organization. I wasn't aware of this, so thank you so much for letting me know that. But that's for organization. What about individuals?
Yeah.
And before that, let me tell you an interesting story. I'm sorry I'm butting in. Yesterday, I was talking to one of the actuaries, Sumit Ramani, you all know. And late night at 10:30, 11 p.m., I get an Insta request from Sumit Ramani. It was actually his fake account. And, I realized it's a fake account, but because there were a lot of underscores and the name was not coming fine. And after talking for 5 minutes, the fake Sumit Ramani asked for 15,000 bucks. That's when I blocked him and reported him. Now, I was aware of this and I could, protect myself. What about the Janta at large? And are the products available?
I think with retail or individuals, things are a bit more difficult and complicated. Because their first priority is going to be either life or health. Then they'll talk about their own assets like motor and property, maybe, if at all they are more interested or feel that it's necessary. Cyber is not even on their mind. People only who suffer the loss of money or personality identification or theft, they feel that, oh, what if I had something? But this proportion is so small that people don't realize it. So products are again available in the market. Cyber insurance as a retail is also available. It's getting bundled in transactions. Paytm has a product where they say, you do every transaction, we'll bundle cyber along with it. Airtel is doing it. So there are products available in the market where bundling or embedding insurance on cyber and some other things are happening. Theft of funds, which is reality, and you can see the latest RBI guidelines, where they say for the 48 hours, if you get reported, the banks has to make good of it. So to that extent, over the small window, if someone is aware, even though you might have shared the OTP unknowingly, the new regulations and guidelines says you will be still refunded that money. So
I'm sure a lot of people in this room will not be aware of that.
That's the new latest RBI guidelines coming in. So I think government is again trying to minimize the risk. I don't think they're eliminating it. They're making people aware. They're running campaigns. They do not click, do not do this. Unfortunately, we are so busy in our day-to-day work. We forget. Even though life insurance and health insurance will come at a very low frequency, that the more transactional-oriented losses that will come, people don't think about it.
Yeah, thanks, Hiten, for that. That's interesting. I learned a few things. I do have a lot of questions, but unfortunately, time is up, so we'll probably have to, wind up this, and just leaves me time for some closing remarks. Starting with you, ma'am. If India has to become a developed nation by 2047, where it's not just developed in terms of income, but it's also developed in terms of resilience, what, in your view, are the biggest structural reforms that are required? Just top 2, 3 of them.
Yeah, if India has to become resilient, then we are talking of the economy becoming resilient, the people becoming resilient, and I think some work has already begun now. The kind of initiatives that have been taken by the government, I think one is public digital infrastructure. It has to be used much more. The digital mission is already on. Apart from what he said, we have to take into account the cyber risk, and also that has to be parallelly managed. And taking into account the geopolitical risk, we have to become completely self-reliant. I think our capital market is not so very dependent on the foreign portfolio investors. A simple product like NPS is giving 16% in equity, that's the kind of returns. Maybe, we are not even talking about it. So I think we should be proud of what we have achieved, and we should be celebrating these small achievements. Maybe throughout my talk, I didn't even speak of returns. And I think 16% is to be very, very proud of. So we have to celebrate these achievements. We should not depend on government only. When I spoke of budget, it's not just the government. It's the corporates, it's the associations, it's the federations, it's the NGOs. It's each one of us who are responsible to make our people grow, to make the country resilient, Just one group or just the government cannot make it do so. So each of us have to feel responsible. And for that, I will say again, NPS zaruri hai.
Yeah, thank you so much for that, ma'am. Same question to you, Sai sir and Hiten. What are the 1 or 2 big things that we need to do? And quickly, very quickly, what is the role actuaries can play?
So the big change has to be, shifting the focus from premiums to the protection gap. And that itself will lead to creating an ecosystem around that, both in terms of distribution as well as in terms of products and in terms of the way rewards are offered for the sales, etc., etc. So that's the big change. And from actuaries' point of view, of course, actuaries can do many things, but creating this ecosystem, especially for the lower income groups, that's where a lot of work is required to be done from affordability point of view, and also from all the inefficiencies that I mentioned earlier. That will be a big help to the society.
Hiten?
From a GI perspective, especially when we are saying that we're growing at 7%, 7.5% for the next decade or so, that's what the expectation is on the economic survey. Our biggest risk is that any natural catastrophe that will come, especially earthquake. The last earthquake India has witnessed was in 2001, right? It was a $2.1 billion loss at that exchange rate. In today's market value, this will be close to about $50 billion loss, right? So the biggest risk that the economy faces today is any catastrophe will take us back almost more than 5 to 10 years, depending on whether recosting or rebuilding will come in. So to ensure that we are resilient, I think the government has already taken steps through NDMA to ensure that how do we protect the assets, the infrastructure that the economy is creating at the end of the day, so that things become sustainable for us. And this needs to be brought in motion. Non-life plays a much different role. It protects assets, it protects very tangible values outside the life and the human that we're talking about. And it needs to be made transaction as well. We need to think about how we, as an actuaries, how we can embed these coverages in our simpler way, cheaper cost, and all of this element. So we can look at innovation on the product side and see how we can distribute this thing through technology to enable better reach.
Thank you so much.